Abhilash Narayan is Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, good to have you with us here. Good morning. Thanks for your time. U.S. indices have been down for 3 or 4 days now. But there are those who believe that with all that is happening in the U.S., I mean, it's not enough. I mean, this is a market in the U.S. which is still very resilient, and it should not be because there is a recession coming, etc., etc. But generally, prices are telling you something else, right? So which one is it? What is likely to play out from here? Your sense?
Yeah, I think if you look at the cause of the recent decline in US stock market, I think it's clear, right? So if you look at economic data, it's been mixed. Just yesterday, we got labor productivity data, which was quite weak. So that contrasts with the stronger than expected PMI data that we got a few days back. Obviously, the focus now shifts to the jobs market data later today, as well as the CPI data tomorrow. But I think if we think about the fact we have a lot of negative news in US, the regional banking concerns, US debt ceiling debate. But if you look at the market positioning, that is extremely short. So if you look at CFTC positioning, we are close to the most extreme short level that we've seen since 2007. So that means that most of the asset managers and hedge funds at an aggregate level are already bearish equities. So we think that the extreme positioning is something that's preventing a sharper reaction on the downside in US stocks. And in fact, if we do get an upside surprise or a positive news, it's quite possible that some of the short covering could lead to a near-term bounce in the next 2 to 3 weeks in US equities. But that would be a short-lived bounce, and we would use that to get out of US equities and rotate to other areas.
Okay, that was my next question. So on cue, when you say rotate to other areas, would you move money out of US equities and into emerging markets like India? Because clearly there's a case of decoupling here, right? Growth has come back, earnings have come back, even in the beaten down pockets, and valuations are not too bad either at the moment. Do you think India is a good buying opportunity now?
Yeah, so I think we have a preference of rotating out of US and Europe into Asia in general. So leaving aside Latin America, etc., we think Asia is the bright spot because of the strong domestic growth, as you alluded to. And when we talked a couple of weeks back, I did mention that the underperformance year to date had meant that Indian equities were less expensive on a relative basis. And I think that does open up the way or reduce the obstacles for performance of Indian equity market over the next 3 to 6 months. So yes, we think that Indian equities should outperform global equities. But at the same time, given the risk of recession, it makes sense to allocate incrementally to bonds as well as gold, in our opinion.
All right. Hi, Abhilash. Morning. But you're still neutral on India, right? What would make you turn that stance?
So actually, we are neutral on India relative to Asia ex Japan, but we think Asia ex Japan will outperform US. So if you take that logic to its end, it does imply that we have a view that India will outperform US and European equities. And I think the recent earnings season has been quite supportive of our view. We think that earnings growth for the next year will be quite strong, around 14-15%. And when you contrast that with the weak outlook for US, the regional banking sector stress, we could start seeing more rotational flows into Indian equities. Just one last point. I mean, if you look at the behavior of Indian and Asian equities around US debt ceiling debates, in 2011, which was the most extreme example, Indian equities were flat in the 2 months leading up to the debt ceiling resolution, whereas S&P 500 declined by 6.5 points. So we think that 6.5%. So we think that something like that could happen this year. So in the next 1 to 2 months, it is quite possible that Indian equities outperform US.
Okay, well, on that note, we will let you go. Thanks a lot, Abhilash, for joining us. So you're saying that Indian equities could perhaps outperform the US markets, but you still prefer other asset classes. Gold is a great opportunity. Gold, by the way, has hit record highs as of last evening at about 61,500 rupees per 10 grams. So let's do